How's it going, everyone? It's Sam. Today I want to talk to you about why so many investors are wrong, and I'm going to show you exactly why that is, because even the Fed has no idea what's happening. And I know that we've kind of talked about that for a while, but Jerome Powell just said that. I also want to talk to you about why exactly I'm doing what I'm doing, and I'm going to put some numbers behind it and show you why this is probably the best approach as opposed to what a lot of investors are doing. Then I do want to thank Margex for sponsoring this video, and then I'm going to cover some of the breaking news. So I will put a couple timestamps underneath the video so that way you can move around if you want, but I would highly suggest staying through to the end. If you don't mind hitting the like button and subscribe button, I appreciate that as well. Now the market is down today. This is, I think, the lowest that I remember the market. Maybe it was lower earlier when we fell down to 17.6 or so, but we're at $858 billion, down 4.4% today. Obviously not a very good day, and some smaller cryptos, some altcoins are finally bleeding a bit, like Solana down at $32 and Cardano at 44 cents. So why is the market down? Well, first of all, the stock market's down as well. We're down about 1% on the NASDAQ. It was down as much as almost 3% earlier. This is coming after some inflation news. The Fed's preferred inflation measure rose 4.7% in May, around a multi-decade high. So core personal consumption expenditures, excluding food and energy, rose 4.7% from a year ago, slightly less than expected, and headline inflation remained strong, raising 0.6% on the month and holding near the highest level since 1982. Weekly jobless claims totaled about 231,000. So this is pretty on par for what we expected. And it's just one of those weird situations where good news is bad news is good news is good news, bad news is bad news. It's hard to tell exactly how the market's going to take any news these days, because if we have inflation coming down a bit and people are not spending as much, well, that means that the consumer probably isn't as strong, so that's a negative thing, but also inflation is coming down, so it's just kind of a mixed bag, right? A lot of people just want to get to the point where inflation starts coming down. We still have a strong consumer, which is going to be the hard thing, and then we can flip around and start lowering rates, or at least cut off how much we're raising them. I think that's what the market's really looking for, but again, that's really hard to do while keeping the consumer in a good place. Now, with that being said, Bitcoin is falling down today with the general softness in the market. We're around 19,000. And we bounced right off of about 18.8. We did fall under 19,000. Now, where are we going to go from here? Well, it's tough to say. A lot of people are calling for Bitcoin to hit 13,000, 14,000. We had never seen any kind of market like this. First of all, we haven't really been in a recession with crypto. And second of all, we've never seen it fall below the last cycle peak. We've never seen it, I believe, this long under the 200-week moving average. This has been historically a good time to be buying, but again, there's no way of knowing because this time is different. And everyone always says this time is different, but this time it really is different. We also have the Fed saying this. This is just coming from yesterday.
One way to say it would be, I think we now understand better how little we understand about inflation.
That's not very reassuring.
No, honestly, this would.
So they have no idea what's happening, and they don't know how much or how little they actually do know. Now, before we get to some of the breaking news, I kind of want to talk to you about why I'm dollar cost averaging again, and I realize that maybe I'm just repeating myself too much at this point, but I ran some numbers so you could see exactly how beneficial this could be compared to timing the market perfectly. And again, this is probably a little bit overkill, but I just believe in dollar cost averaging a lot. So let's say you want to dollar cost average for the next 2.5 years. You're just going to say, hey, I have some extra cash. I have some extra cash flow. I'm just going to buy, right? I don't care where we go. I'm just going to put in $1,000 a month. Let's say Bitcoin's price this month is 20,000, then it falls down to $1,500, $1,500, and it takes 6 months for us to start rebounding, right? Like the end of the year. And even then, we're not rebounding very quickly. It takes us basically a year to get back to 25,000. Well, at the beginning, you're going to buy some Bitcoin. You're going to lose some here. You're going to lose some that you could have put in at a better time. You could have priced it out better. We fall down to 14,000. You still buy $1,000 a month, and then we just slowly rebound. Eventually, we start moving up a little bit more substantially here next year, but it still takes us 2 years to get up to 60,000. So not even all-time highs. It takes us 2 years and 3 months to hit all-time highs, and then 2.5 years down the line, we're still below 80,000, which I don't think is out of the question, especially with the Bitcoin halving coming in a couple years, or year and a half to 2 years, whatever that is. So you are able to accumulate about 1.03 Bitcoin, which is fantastic, right? You're part of the whole coiner club. Now, let's say you could time it perfectly, right? You are not buying the dip at all until we've hit the very bottom at 14,000. You put in all the money that you saved, $5,000, and then you just continue to dollar cost average from then, because you're timing it perfectly, and you just keep on buying $1,000 a month. Eventually, you get to the end, you have 1.09 as opposed to 1.03 Bitcoin. Now, at this time, that's worth about $85,550. That's great. You put in $30,000, you got $85,000 out, and this is compared to about $81,000 in the DCA example. So you're able to make about $4,500 more dollars over 2.5 years. Now, this is a difference of about 5.7%. So I don't know about you, but for me, I know that I'll have a hard time calling the bottom. I'm not going to be able to read the charts perfectly. At the bottom, there's going to be max fear as well. So there are going to be a lot of people that say don't buy. That's always how it is, right? Same thing with stocks. When stocks fall down in price, analysts downward revise, say that now is the time to sell, or that they lowered their price targets. And then when the stocks already have moved up, they say, yeah, buy now. But that's kind of the same thing in crypto. When things are going well, people are saying that you should buy. When things are going poorly, they say wait. So it's going to be really hard to time the bottom, I think personally, right? We're at a historic point now where we are seeing really low prices historically, and hitting that exact bottom is going to be hard. The other thing is, if we start to rebound, some people are going to be calling it a fake rally. They're going to say that's a dead cat bounce. And then eventually we will just get to the point where everyone thinks we're in a bull market again. But when is that? Is it when we're at $25,000? Do you not invest anything until $25,000? It's going to be hard to tell. But for a 5.7% difference, I'd rather just dollar cost average. And of course, you can play around with the numbers. You could say, okay, we're going to go down to $5,000. Obviously, that's going to change what you want to do and how these numbers work out. But for 5.7% difference, I just want to buy and hold and not worry about it. Just continue to dollar cost average, because I can't read the future, and the Fed can't read the future. Economists can't read the future. No one knows what's going to happen. I think it's kind of obvious at this point, right? No one knows what's going to happen with inflation. No one knows what's going to happen in the economy. This is unprecedented. We've never pumped this much money into the system. So I'm just going to continue to buy, make sure that it's not too much, that I'm uncomfortable, and make sure that it's something that I can do for a while. Now, let me know your thoughts on this down below. I do want to thank Margex, and then we have some of the top news of the day. Now, before we go any further, I want to talk to you about a massive sign-up bonus that's available on Margex. Now, Margex is a partner of the channel. There, you can long and short cryptocurrencies from Bitcoin, Ethereum, XRP, Litecoin, EOS, ADA, Solana, and more. They make it super easy. And you can see you can go on leverage up to 100x. I'm always very cautious and don't use leverage myself, but I realize some people are traders, which this bonus is going to really help those traders. But I realize that some people like to trade and want to long and short the market. That's a little bit risky and a little bit advanced for even what I do, but you can use Margex to do that. It's one of the easiest to use platforms out there for longing and shorting on leverage. Now, something that a lot of people worry about with going long or short on leverage is the fact that a lot of the time you can have massive wicks that do liquidate a variety of positions or a good amount of positions. Now, something that they have on Margex specifically is something called an MP shield. This protects users from price manipulation and prevents liquidations. Now, I'm going to leave my link underneath the video, and when you use promo code FRIEND15, I'll leave that underneath the video as well, you get a 15% bonus on your deposit amount. So if you deposit $10,000, you get $1,500. Now, you can only use these for trading fees, but this also goes a long way. So check out the links underneath the video. Remember, promo code FRIEND15, and thanks Margex for sponsoring this video. Now, we had Grayscale try to get a spot ETF approved, and it got rejected. Now they're saying that they are going to be taking on the SEC essentially and suing them. It's going to be kind of interesting. They say that this recent decision shows that the SEC is acting arbitrarily and capriciously by failing to apply consistent treatment to similar investment vehicles. Now, Grayscale has about $13 billion of assets under management and has a lot of Bitcoin itself too. So this would be the spot ETF to approve. At the same time this is happening, we have another spot ETF that got approved in another area. First spot Bitcoin ETF approved to launch in Europe in July. Now, I believe this is actually in the Netherlands here, and we've already had it in Australia, we've already had it in Canada, we've had it in other countries. Fact is that we just can't get one approved here, and when that does get approved, I think we will be bullish, but we have no idea when that's going to be. They say that that there's still some issues behind regulation and whale manipulation, that kind of thing. Now, maybe some of that gets taken care of towards the end of the year or next year. Who knows at this point? But it's going to be interesting to watch how this all works out. Now, Singapore reprimands 3AC for providing false information. We have them saying that they were only allowed to have about 30 investors up to $180 million. This is after they registered as a fund management company back in 2013 in Singapore. Obviously, this is easy to go back and make fun of 3AC or to reprimand them from Singapore, from Singapore's point of view, but honestly, they should have known, right? Everyone knew that they were a massive hedge fund. They didn't want to touch it. They didn't want to condemn them at all when things were going well, but now they're saying, oh, we had no idea that it was worth over $180 million, but obviously they were worth $18 billion, so that's 100 times that size. You would think that they would know what's happening in their own country, especially when everyone else knew that it was massive. Now, I do want to talk about USDT too in a second, but first of all, just be careful out there. OpenSea data breach just got announced. It's causing a leak of users' email addresses. This is coming not from OpenSea, but from a company that they work with, Customer.io. They had an employee that shared this with outside parties. So just be careful if you have ever if you've ever used OpenSea, really, just be careful with your email, be careful with your phone. If someone reaches out to you about something, just assume that it's some kind of hacker. Always go to their official website and then address it from there, whatever issues you might have. And then Anonymous just vowed to bring Do Kwon's crimes to light as well, talking about hackers. If you don't know what Anonymous is, they are a large hacking group that's I'd say pretty public with what they try to do. They're an activist group, or hacktivist group as they say, and they've tried to uncover a lot of things in the past. They have been behind some hacks, and they typically are more like vigilantes. They're trying to do well, but they're trying to point out all the things that Do Kwon's done in the past, and they say that there's really no way that they can fix what's already happened, but they're going to try to bring as much to light as possible, and I think kind of just provide more evidence for what he's done previously. This includes possibly cashing out $80 million each month from Luna and UST prior to the collapse. So be on the lookout for this. And then yesterday I talked about Sam Bankman-Fried and how he says many third-tier exchanges are secretly insolvent. I would just be careful with any amount that you put on exchanges. I mean, we talked about Margex earlier in the video as a sponsor, but you have to realize if you're using Margex, you're using it for a specific reason, probably leverage trading, and with anything, right? If you're using bots, let's say, on some exchange, or you're using margin trading, just know that that should probably be a small portion of your portfolio, like really small. I know some people that don't put 0.5% of their crypto on exchanges. And I just got this too. I was trying to move some crypto onto Binance on my phone and it wouldn't let me. So I don't know if they know something that I don't, because obviously we've talked about Tether as well. A lot of hedge funds are trying to short it and trying to bring it down. A lot of people think that it's just going to go to zero because they don't actually have the funds to back up their crypto and USDT. But I don't know what's going to happen with this. A lot of exchanges hold a significant amount of USDT for trading pairs, and obviously they would be really hurt if USDT went down to zero because a lot of their reserves are in USDT. I don't know if Binance is trying to limit exposure or if it's just some quirk of the system. I'm able to deposit via their website, but just not on the app. I don't know what's going to happen there, but it's kind of interesting how this is all shaking out. And then the last thing that I want to talk about, who's actually buying Bitcoin right now? And the majority of people are shrimps and whales. So let's look at this. This is the shrimps that are buying Bitcoin, less than 1 Bitcoin, and you can see just how much they're adding over time. You can also see crabs, 0.1 Bitcoin to 10 Bitcoin, adding over time as well. And then sharks, people 10 to 1,000 Bitcoin, are kind of back and forth. You can see that they have been adding and then dumping and then adding, and this is just depending basically on the week. You can see a lot of them have added recently on this recent dip, and then the larger individuals, the whales, they have over 1,000 Bitcoin, keep on adding, keep on adding, keep on adding. You can see the green down here, how much they're adding over time. And then miners are the ones that are really selling, and we've talked about this a lot. Miners dumped, and a lot of them are having issues. We talked about Compass Mining recently. They're not even able to pay utility bills, and a lot of other miners just have to pay for normal expenses, right? They have salaries. They are paying for rent or paying for property taxes, paying for electricity, all these kinds of things. And then exchange is also dumping as well. So let me know your thoughts on all this underneath the video. Are you a dollar cost averager? Are you waiting for the bottom? Have you already put all your money in the market? Let me know what you think about some of this other news, and I'll see you in the next video. Bye.